everyone, welcome to another episode of the Mizuho Week Ahead. I am Xing market economist at Mizuho Bank. The theme for the upcoming week is dismissals and interventions. Iran was rather dismissive about Israel's latest attack last Friday, with Iran's foreign minister labeling the supposed drones as toys. Aligning with Iranian state media, he said that the attack was limited in scope and severity and should not be characterized as a strike. More importantly, Iran communicated that it has no intentions to strike back. While the attack saw 10-year UST yield fall 10 basis points before moving higher to end Friday just 1.2 basis points lower, the fear of a wider conflict is likely to linger. Considering the equities falling last week, a calmer tone to start this week could pave the stage for a mild risk rebound. In contrast to a mere technical rebound, a recovery will rest on US exceptionalism prevailing, with US GDP print on Thursday. Nonetheless, unilateral dismissal of risk is dangerous amid Israel's official silence on the attack, along with the National Security Minister hinting that the attacks are weak. Structurally, with the US House passage of aid to Israel and Ukraine, caution is warranted about the underlying financing trade-offs which will buoy UST yields. On the monetary policy front, Chicago Fed's Goolsbee fell in line with Fed Chair Powell, as he warned that 3 months of inflation data cannot be dismissed. Given the hawkish Fed rhetoric, any shock from a higher PCE deflator print this week might be more subdued. Nonetheless, elevated UST yields remains the base case. The consequent strong dollar backdrop also poses tough questions for central banks on coping with the resurgent greenback. Accordingly, the BOJ this Friday cannot dismiss important inflation risk even as inflation edged lower in March, and even if BOJ is expected to continue signaling an accommodative stance. The implication being that Japanese yen intervention risks remain on the cards. In EM Asia, means to cope with the resurgent dollar this week may range from keeping a vigilant watch actual FX intervention to actual policy rate moves. In fact, last week, the likes of the BSP signaled shift of intervention levels. The SBV and Bank Indonesia conducted FX intervention. On Wednesday, Bank Indonesia may opt to further stabilize the rupiah via 25 basis point hike to dampen real rate pressures. With resilient growth providing policy room, a hike could well serve to dampen depreciation pressures, with the rupiah already exceeding levels above last October when BI went with a surprise hike. Down under, Australia's March CPI print also on Wednesday may reveal far from satisfactory disinflation outcomes. The RBA ends up in a tight spot with insufficient grounds to move policy in either direction, watching a battered Aussie dollar engineering further upside risk to inflation amid slight worries of a looser labour market. While Korea GDP on Thursday is expected to improve above last quarter's 2.2% year-on-year print on firmer external recovery, softer retail sales imply that domestic risks cannot be dismissed. Having already intervened in FX markets last week on won volatility, the growth print is likely to back the BOK to persist with keeping restrictive rates for longer. All in, FX intervention operations and military operations are often far from a one and done, and as such geopolitical and FX risks should not be too easily dismissed. With that, we have come to the end of the video. For more information on the key events for the next week, please refer to our Week Ahead publication or contact your respective sales desks and RMs. And for regular notifications on our markets views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.